Sorry, YouTube. All right, good morning, everybody. Good morning and welcome. Nice to have you guys here today. Daniel, Luciano, Marali, nice to see you guys. I love it when I walk into the room and there's already so many questions. Makes me happy. Means you guys are wound up. Good morning, Zeba. Zeba, how's the weather in the Woodlands? Is it going to be sunny for me this weekend? I need you to make that happen for me, please. Good morning, Ron. Ron, what was your question about news? Is it about the IMF meetings? I have no idea. True story. I don't trade what it is. I just trade the reaction. So the IMF meetings are usually held twice a year. They're attended by the representatives of the IMF and the World Bank. Meetings are open to the press. Officials usually talk with reporters throughout the day. Formal statement covering policy shifts. Both the comments and statements can create market volatility. I don't know. I suppose that there is the potential, but it is considered low impact. That's all I pay attention to. So I'm not really going to worry about it. There's not a lot going on in news. And guys, we check this every morning. You should check it every morning. Be aware. Really paying attention to high impact, paying attention to medium impact. Peter Graves or Tom Cruise? I'm rooting for Tom Cruise, you know. Am I here? I got it. I'm going to write that down. And guys, if I'm calling you stuff that you don't want to be called, or if I'm taking your name and just stretching it out and going through everything, feel free to let me know. It may take me a time or two, but I typically get it. So guys, every morning, just like we're talking about, checking news, right? Ron, I don't need to mute to call you things. I'll just get your number from Dean. I'll call you names, but I'll at least call them to your face. It's more fun that way. Each and every day, guys, there may be reactions in the market. Today is very much a slow news day. A lot of low impact. Until 6 p.m., there's a medium impact. Apparently, Harker is a little more important than Goolsbee or Kashkari. But then tomorrow morning, when we check news again, we're going to see all this red, high impact, medium impacts, high impacts. So tomorrow is probably going to be a market moving day. Today is kind of mellow, which is cool. We'll get in and do what we're going to do. And we'll follow rules. We're going to talk about the rules. We're going to talk about a lot of different things today. I'm going to mix it up just because I think it's fun. I think it's fun to do different things every day. I'm starting to embrace that. My OCD is going on the back shelf. So we're going to start with a picture of a shark. And I want you guys to remember, when we talk about being a day trader, especially being an independent day trader, not everybody comes to the market with $1 billion in their trading account, willing to trade thousands of contracts. So understand your place. And I think that this helps adherence to the rules. Think of the big money investors, those market movers, those people that when their boss says, hey, do me a favor, go sell the S&P, they're selling 10,000 contracts. They're not selling 2 contracts hoping to make $200. These are the guys that are creating the momentum in the market. These are the guys that are establishing the direction in the market. And when I say guys, it could be guys or ladies. These are the people that are reacting to those key Fibonacci areas that you can see as a Nexgen user. And I like to think of myself as a remora. I'm going to let these sharks get in and get business done. I'm going to let them do what they're going to do because I can't impose my will on them. No matter how much I wish I could go short, If these guys want the market to go up, that's exactly where it's going. So I fancy myself a remora. I'm going to wait for these guys to establish trend. I'm going to wait for these guys and gals to create momentum, to make sure that they're not near one of those Fibonacci areas that they're going to react to. And then I'm going to pull my little piece out of the pie. So I think that if you embrace this concept right from the beginning, that you do not control the market, the only thing that you're going to be in control of today or any other day in your life is whether or not your rules are met. And if your rules are true, well, then you're going to take a trade. And if your rules aren't true, then it's going to be up to you to figure out what it takes to get you to sit on your hands and wait for them to be true. And that's kind of what we're going to talk about today, guys. We're going to talk about the rules. We're going to talk about the different looks associated with each rule. We're going to talk mainly about entries. Your first 20 to 30 days with Nexgen is really going to be a study on entries, getting into the market at the absolute best spot. Because, and I'm getting this put on coffee mugs, great entries really do create manageable trades. Great entries allow you to reduce your risk. They allow you to increase your profit potential. Good morning, fella. So we're going to focus heavily on entries for the beginning of the day. And we're going to go through and take a look at what you're doing and why you're doing it. Every time you take a trade, it's imperative that you post a picture, that you let me know what it is that you're doing, because that is the path to becoming a confident trader ASAP. Post your trades in class, guys. 15 hours every week. My sole purpose in this classroom is to give you feedback on each and everything that you do. My job becomes much, much easier if you'll do me the courtesy of writing your rules on your chart. When you take a trade and you post it, make sure that you're telling me what you're doing. And don't just write rule 1 if you're brand new. Do me a favor. Write strong triggers. And don't just write rule 2. Go ahead and write out no termination conditions, because the rules aren't just to let me know what you're doing. It's also a visual. It's you reinforcing that you are in fact following your rules, that you do have an understanding of what your rules are. And one of the things that I do when I look at your annotations is I make sure that your annotations line up with what's actually happening in the market. And this is one of the ways that I'm going to help you gauge how well you're reading charts in the moment. So I'm going to share this picture in the room. Guys, I want you to commit to this. I want you to commit to telling me why you're doing what you're doing. Then the next thing that is going to get you where you want to be is use that spreadsheet, guys. Everybody has it. It was provided to you. Every time you take a trade, you can use a trade tracking spreadsheet. You can put it in there. You can take a look at what you've done. You can take a look at what you did, won or lost. And guys, this is the best example I have. A client allowed me to share this with class. This was her spreadsheet. You'll notice that every trade she's taken, and this is only one page that you can catch with a camera. Every time she takes a trade, she's talking about when she took it, whether it was simulation, whether it was replay, how she felt getting into the trade, what her win-loss was, and any notes that she had regarding the trade that she took. And a lot of times you'll notice that when she's a little nervous and there was a loser, she's breaking a rule. And guys, if you do this, you're going to put yourself in a position where you understand not only the patterns in the market that are bringing you where you want to be, but also the patterns in yourself. The longer you practice and learn to read the software, you're going to begin to recognize things that you do that may not be advantageous. Mine was trading in determination conditions. And guys, that was my thing. When you looked at my spreadsheet as a brand new user, if there was a termination condition present, I wanted to trade into it. If I had reached one of those areas where the market was likely to stop, you better believe I was doubling down. And all it did was pull money right out of my account. Some users trade early, some forfeit momentum. Some people don't trade from areas. And what happens is not only will you begin to recognize these patterns in yourself, but if you're taking the time to post them in the room, I'm going to recognize them as well, and we're going to work together to correct the behavior. The next page of your spreadsheet, as this is where you're going to put your favorite looks. As you focus on those entries, every time your entry rules are met, go ahead and put it into the spreadsheet. What's it look like to take the perfect crude oil long? And then when you click on that link, it's going to show you exactly what it looks like to take that perfect crude oil long. And you'll be able to go back and study, and through repetition, gain confidence and trust in those rules. You're going to believe in the power. You're going to believe in the methodology. And you're going to prove to yourself, you're not going to take my word for it, that when you follow the rules, you've found a trade that wins more than it loses. And by adherence to the plan, you're going to put yourself in the best position for success. And that's really what we're going to focus on today, guys. We're going to start it out with a high probability trend trade. That high probability trend trade is only 3 rules, and each rule is going to provide you an advantage. Rule number 1 says that you must have strong trigger lines. It's going to provide you the advantage of momentum. No termination conditions is going to give you the advantage of a clear path, and we're going to talk about each and every one of these. And then using a limit order at areas inside of the triggers is going to provide you an entry area where the market is most likely to continue. And it's a simple equation. It's a 3-part equation. 3 advantages create a trade. We're going to talk about each of those advantages. We're going to talk about how to identify them, and we're going to do it on only 2 charts. Initially, you're going to begin on the 13.2, and you'll be able to use the most current bar to determine the trend of the market. And you're not using even the bar, just the background color. If the background on your 13.2 is green, you're in an uptrend, and you should only be looking for rules to be met for high probability trend trades long. If you are looking at your background and it's red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trade short. Guys, one of the biggest first advantages you can give yourself as you look for a trade, especially as a new user, is make sure that you're following the trend. Make sure that you're going the same direction those deep pockets decided the market was going to go. Next, on the 13.2, you're going to be able to gauge the overall momentum of the market. You're going to make sure that there's strong triggers, the first of 3 advantages that you give yourself. And you're going to be able to do that with the trigger lines right there on the 13.2 chart. And then you're going to be able to make sure that rule number 2 is met, making sure that there are no termination conditions, that you have the advantage of a clear path. Guys, rules 1 and 2 must be met on the 13.2 before you ever turn your eyes on the 5.1, because the 13.2 is very much a broad stroke of a brush. It's like painting your living room walls before you get down around the outlets or the baseboards, before you really start to detail it. And then when these rules are true, you go to the 5.1, and on the 5.1, you're going to refine that broad stroke of the brush. And this is where your entry at the area where the market is likely to continue, using that limit order to buy or sell a pullback. This is going to help you minimize your risk, maximize your profit potential. And once again, I'm going to say it, great entries create very manageable trades. So this is what that refinement process looks like. On your 13.2, this 1 bar is going to tell you everything you need to know to look for an entry on the 5.1. And what happens in 1 bar on the 13.2 may happen in 15 to 30 bars over here on the 5.1. So it's that refinement process, taking the internals of this bar, breaking them down into smaller bars, is going to allow you to pinpoint with really amazing accuracy where the market is likely to continue. So that's what we're going to talk about today, guys. Just 2 rules. We're going to do it on, or 3 rules. We're going to do it on 2 charts. And then we're going to talk extensively about where you can find those rules, what those rules look like. And I know that I have some new people in the room today. If you have any questions on any of the concepts that we're talking about, interrupt me. This class is not designed to be a 3-hour lecture. In fact, I prefer that it's a 3-hour conversation, because this conversation is going to help you get what you need out of the room. So straight from the education page, guys, we're going to go to the tutorial section, and the tutorial section is going to give you everything that you need for success. It's going to give you your rules. It's going to provide you with the trade tracking sheet if you want to download one. It's going to remind you of the path that you're going for. But everything starts with rule one. Thala, I didn't have any challenges this morning with it. I'm not sure if anyone else did. I know John Novak was able to get into his as well. Apex had no issues for me this morning. I'll tell you what, while I talk about rule number one, I'll try to log into my Rhythmic and just double check. No problems for you, Luciano. And I just double clicked on mine. We'll see if it comes up. You guys, this room isn't just rules, right? Thala comes in, he's having a challenge. Let's see if we can solve it. That's what we're going to do for you here. Yeah, I've got zero issues with mine. It's coming up rock solid, Thala. Came up quick and fast. Maybe reboot the computer. Sometimes a computer reboot does wonderful. Guys, let's get into talking about rules. Let's talk about advantages. It said that the background on your 13.2 is going to help you establish the trend. Your trigger lines are going to do that. And what you're going to find today is that your trigger lines are going to give you an enormous amount of information. When your small triggers, these solid lines, the faster trigger lines, cross above the large, the dashed, these slower trigger lines, this is the process that defines trend. When they go above, that background paints green, you know that you're in an uptrend. You know that you should only be looking for rules to be met for high probability trend trades long. When those small triggers break below the large triggers, that background paints red. You know right off the bat from the color of that background that you're only looking for high probability trend trade entry short. Remember that trading with the trend is going to give you that first advantage, and it's not even listed in the equation, but the trend is your friend and all those other cliches. After the trend is established, we're going to look for momentum, and there is a very distinct look on your 13.2 large and small triggers that's going to let you know that you have that advantage of momentum. The small triggers are crossed up. They're above the large triggers, which are also crossed up. Notice that they're both green in this green background, running parallel to one another, up and wide. This is the most favorable look for buying a pullback to Fibonacci support, guys. This is what we call odds favorable momentum, and you're going to see it annotated on my charts, and you're going to see me write it on your charts, OFM. And this is a key phrase that you will hear in class all the time. In a downtrend, small's below the large are wide, they're angled down. Guys, this is your best of the best look. This is rule number one defined in pictures. This is your strong trigger look, and this strong trigger look lets you know that the odds are favorable for the market to continue down. If you commit to the advantage of momentum as a trader, what you're doing is you're avoiding that loss of momentum. When those small trigger lines work their way back inside, we call this a weakening of the large triggers. And a weak large trigger, anything can happen up or down. And you're going to see that. Those weak trigger lines can very often give you a look of when the market is slowing down, is getting ready to turn. Let me pull up the advantage picture here. Anything can happen. Small's inside, it's weak. And there's that turn in the market, leading to odds favorable. There's that pullback, probably to Fibonacci, potential entry. Things begin to slow down. Anything can happen triggers. There's a reversal. Provides odds favorable. Once again, there's a pullback. We sell and buy pullbacks. And then things get a little wonky. There's no agreement. The background is green with the large triggers are red. This becomes a dangerous area, and then you just wait for it to sort out and get back to odds favorable momentum. Guys, it's those moments of indecision without that momentum where your trigger lines don't agree. That's where new users are going to begin to try to predict the market rather than simply trading with the established. Stephen F., you've loaded generic charts per the NA. Tick replay is enabled. No synthetics on the charts. Did you apply the template? Because on NinjaTrader 8, the one thing that I forgot to do when I was building charts is I forgot to apply the template at the top, and I couldn't figure out why it wasn't working. Or if you've loaded the generic template with tick replay enabled, that template may override. So just right click, Stephen, and go to your data series and just be sure, just one more time, extra little look, and make sure that tick data is in fact clicked on. And then of course, my go-to when the basics, because I'm a basic kind of guy, when I can't seem to figure it out 100%, that's when I rattle Jason's cage a little bit. But I would start by right-clicking and making sure that the tick data is there, because I have put templates on before, and if the templates don't use the synthetics, it'll automatically unclick that box. Let me know if that helps. So odds favorable momentum, guys, giving yourself that first advantage. Smalls above the large, larger wide, they're angled. This is your best look for a high probability trade. This is the advantage of momentum. And when we scroll back together today on your 13-2 chart, you're going to see these tails on the 13-2. This is where price kind of drops below the midpoint. It comes out as a wick or a tail. Guys, these are potential pullbacks on that refinement chart. These are potential entries for a high probability trend trade during that odds favorable momentum. You'll see it in uptrends, you'll see it in downtrends, and you'll be looking for it at that point of the highest. Gary, you don't need to do anything with NT7. It's just going to run. NT8, if you want your synthetics, you have to have tick data enabled. Guys, one thing John Novak did for you in the resources, if you haven't done this in a while, download the indicators, let it overwrite, because there are workstations that are downloaded with every precaution taken. Good morning, Dimitri. So if it's been a while since you've downloaded, and I want to say after April 1st or maybe April 9th, re-download the indicators. Jump in there, get in there, go through the rigmarole of making sure that your computer is stable and running. And what I've found in my own world, probably because I'm a man and I always have spare parts, is I go to follow directions like this and I skim and I miss something. My brain tells me, you got this. And then I miss something. So go through it slowly. Make sure that you're there. Make sure that you're comfortable. There's a video for you to watch. Guys, from the resource page, you can download every workspace that you need that John Novak has painstakingly put in the right spot for you. Start fresh. I love a fresh start. Newer users, I got 39 of you in here. I know that some of you are new. How are you feeling? Odds favorable momentum, pretty easy, right? Great way to start it out. I'm looking at my names in here, just seeing who's new. I think we've got a couple. Awesome, Thala, perfect. That's always my go-to. When things don't want to work right, I love to reboot. So guys, give me a Y in the room if you're with me. Odds favorable momentum. That's going to set the tone for this high probability trend trade. That's going to be the first advantage that you give yourself. That should be your commitment to each and every trade starting out, especially if you're not where you want to be yet. Guys, I get two types of traders in this room. I get the people that are brand new, learning the software, they're excited, they want to do it correct. And then I get the people that are coming back to me. The people that decided to go their own way, to do their own thing. And maybe they didn't have the results that they wanted. and they're ready to refocus. So your first refocus is odds favorable momentum. Your second focus is not trading into termination conditions, making sure that you're not trading into an area likely to stop the market. And it's a pretty simple comparison of T3 trigger lines, the same trigger lines that establish momentum, and of areas. And these areas that we're going to look at to make sure that we're not reaching a point that's likely to stop the market is a divergence high, this magenta line, red resistance, yellow 1-to-1s, blue Fibonacci support, or a cyan divergence low. Guys, everything is color-coded with Nexgen to make your life a little bit easier. Just looking at this chart, you can see uptrend, downtrend, uptrend, right? That's how simple your analysis is going to be. Odds favorable momentum, odds favorable momentum, odds favorable momentum. Losing momentum at a key area of resistance. And you're going to get to a point where you can see this each and every day. So we're going to look at rule number 2. Termination conditions must be false. There has to be room to your profit targets. This is the second part of a high probability trend trade. And we're just going to compare. You're going to compare. When price reaches an area, you're going to ask yourself, where are the trigger lines? If the trigger lines reach an area of support and they all remain above that area of support, this is that reaction. Price reacts to Fibonacci. The sharks know about this Fibonacci. If your trigger lines, your momentum indicator stays above the area, no more short trades into that area. Either let it break or let it roll. Those are the two options. Price trades into resistance. All of your trigger lines remain below resistance. Let it break or let it roll. Pulls back to support. None of my trigger lines have broken through support. You either let it break or you let it roll. And you're going to go into each chart reading moment with that scenario. Price reaches resistance. None of the triggers are through. The area is not broken. We have no clear path. What does it mean for it to break? It means that both the small and the large get to the other side of resistance. You'll see that resistance begins to act as support. This is a broken area. This is a clear path. Odds favorable momentum. Look at that, guys. There's one of those tails again, one of those potential entries on the other side of an area that's broken. And then there's one more look, guys, and this is going to be your first medium probability trade. Let me go to the definition so that you guys know exactly what I'm talking about. Right now, we're focused on the high probability trade. Every indicator on every chart is going to agree with this trade. Strongest triggers, clearest path, nothing between you and the target. Guys, your ability to take a high probability trade, to understand the concepts associated, to identify these advantages, is going to bring you to a medium probability trade. And a medium probability trade is defined when most of your indicators line up for a trade. However, a small issue exists. When executing medium probability trades, you're going to want to manage them assertively. Your ability to read your charts based on your high probability trend trade study will allow you to do that. But a medium probability trade simply means that there's an issue. This is probably the most common issue. When the small break above the large or the area, you have odds favorable momentum. This is an area with the potential to break, but it hasn't yet broken because both small and large are not above the area. You'll reach these areas with the potential to break, and you'll be able to gauge on your smaller, faster chart if you want to take an attempt at a trade, guys. This is not a clear path. This will be your first small issue trade. So give me a Y in the room if you're with me. I'm trying to simplify today. We're going to use the KISS method as much as possible. Price reaches an area, absolutely no trigger lines go through. Hey, good morning, Tammy, and welcome to Nexgen. I heard you joined the family. Now the fun starts. Smalls and large break above the area. The area is broken. Smalls break with odds favorable. The large do not. Not a clear path. Puts us in a medium probability situation. Guys, I'm going to share this picture with you because you really can't make termination conditions any more simple. than this look right here. And what's amazing is we can go back and we can look at the S&P today. Price reached this area of resistance. None of the trigger lines broke through. Look at the reaction. We knew that there were no more long trades. Smalls below the large are wide. The smalls break through, but the large don't. 36.16 has the potential to break, but has not broken. And look, guys, it chose not to break. Price breaks an area, pulls right back to it, likely to continue up. That odds favorable momentum into areas gives it the potential to break. Guys, you can scroll back and begin to study over and over. Price reaches support right at Fibonacci. If nothing else, you begin to develop a trust in Fibonacci, guys. Look at how amazing this is. Almost to the tick, right at support. No trigger lines go through. Even with odds favorable momentum, you know not to try that short. Right to resistance, absolutely no trigger lines break through. And there it goes all the way down to support, guys. Take a minute now and then. Go to your 5-1, go to your 13-2, actually go to your 13-2, excuse me, and identify these termination conditions. Go back and identify odds favorable momentum. Get yourself the visual of what it means to have these rules met and study it so that it becomes easy, so that you can do it in the moment. Background is green. Do I have odds favorable momentum here on the 13-2, guys? What do you think? Do I have that best trigger look to give me the advantage of success, of momentum? I don't think so. The larger down, the smaller up. Thala, you can do whatever you want. Do you have rules for it? That's the question I ask people. Do you have rules to enter at an area not inside of favorable large triggers? When your 21.3 is strong up, when your 13.2 is coming from a bad top, right into a mid band with the large triggers a full bar away? Do you see how that works? You can do whatever you want, right? But do you have advantages taking this trade? I feel like you're forfeiting some of them there. What do you think, Thala? And guys, typically when people ask me, can we? You're asking, hey, Mark, is it okay to break my rules? Mark, is it okay to trade into a large chart midband if the large triggers are full bar away? Is it all right if I do that? Because I really want to be in a trade. Yeah, they hadn't even broken. Never gave a pullback anyway, right? But Thala, wouldn't it be amazing, instead of focusing on maybe trades, did you catch this long? Because we're going to talk about how you guys can get that one. Logged in a bit late, that happens. I do that sometimes too. Usually about 2 minutes after the perfect entry. And guys, from a termination condition, we reach support. Absolutely none of the trigger lines have broken through yet, right? So we're waiting just a minute. If this area is really going to break, those trigger lines will get to the other side of it. But what you run into is if you just ask yourself, are the rules met? And you commit to that in the beginning. Either the rules are met or the rules are not. Guys, you'll learn your rules so well that eventually you'll begin to stray outside of that high probability. You'll begin to look at medium probability. You'll be able to identify those small issues that exist and be able to read your indicators and understand if taking a shot at that medium probability trade is in your best interest. One more picture here, and I love this one. Odds favorable directly into one-to-ones. Absolutely none of the trigger lines break through. And look at the reaction to Fibonacci. Well, this termination condition gives us what we call a full reversal, guys. Your large triggers go from red to green. Your small get to the correct side. This full reversal, this termination condition gives a full reversal, provides odds favorable momentum and a clear path. And there's another one of those tails. There's one of those potential entries on the 5-1. Guys, this is the highest probability trend trade in the book. A 5-1 trend trade that happens after a termination condition is the highest probability trend trade. This is a trade that typically wins 70 to 80% of the time. And when you focus on these 5-1 trend trades that happen after the termination condition on the 13-2, give yourself 20 trading days. Guys, you're going to be nailing the advantages. You're going to be understanding momentum. You're going to be understanding termination conditions. And you're going to be understanding how to get in at the best of the best point. And then from there, all you do is grow with the software. One more termination condition for you guys. And this one revolves around the small chart. And this is the only termination condition that I'll use that small chart for. And it's going to be an indicator when the large chart's turning, maybe not from an area. Even with odds favorable momentum and no area is reached, sometimes the large chart just seemingly changes direction. Well, your 5-1 chart can help you identify this by using 3 divergences in the same price range. 3 losses of momentum every time divergence prints. The negative number prints the cyan line from a low, the magenta from a high. And let me throw it out there, guys. The number means nothing. It either prints or it doesn't. Divergence either is or it is not. All you need to know is that divergence is a loss of momentum. Price makes it to here, momentum lags. Price makes it again, momentum lags. 3 losses of momentum in the same price range may terminate the trend. This becomes even more powerful when those odds favorable momentum, that great trigger look, turns into anything can happen triggers. Now, not only are we visually seeing a loss of momentum through divergence, you're also identifying loss of momentum through your trigger lines. And then it becomes more powerful still when that third pivot, when price can't exceed the previous pivot, because it means that not only are we losing momentum for a third time, but price can't even match what was happening before. And you'll see this look from a low or this look from a top, from a high, in situations like this on the 13-2. So guys, termination conditions give us a clear path, right? Element number 2 in the equation for a trade. We commit to momentum. We commit to the clear path. And guys, let's get into the market. We're going to use the advantage of an entry area. You're going to be able to pinpoint with pretty amazing accuracy where the market is likely to continue. And when your rules are met on the 13-2, this is your look on the 5-1. When those trigger lines are their strongest on the 13-2, we're in an uptrend. Everything says this market's likely to continue to the upside. There's nothing in the way. You're going to focus your attention on these 5-1 large triggers. They should be up. They should be strong. They should be angled in the direction of the trend. And guys, you're going to hear me say in the room over and over, we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers, which means that your large triggers, your synthetic triggers are trending one on top of the other. It's a tight formation because what this is going to do is it's going to give you a smaller window of opportunity, and you're going to be able to design to recognize your window of opportunity when a pullback begins on the 5-1. The pullback is the small retracement in price counter to the underlying trend. 13-2 says up. 13-2 says up with strength. 13-2 says up with strength and a clear path. And on your 5-1 chart, your smaller, faster chart, your refinement chart, you're going to wait for a pullback because rule number 3 says use a limit order to buy or sell a pullback at an area inside of favorable large triggers. It is the wordiest of the 3 rules, but this is the one that's going to get you in where that market is likely to continue. And your pullback begins with a reversal bar. And this reversal bar lets me know that price may pull back to my window of opportunity. And my window of opportunity for a long trade extends from the highest point of support inside of those favorable large triggers to the lowest point of support inside of those favorable large triggers. Or if I'm looking for a short trade, it will extend from the lowest point of resistance inside of favorable large triggers to the highest point of resistance inside of favorable large triggers. What you're doing is you're identifying the area where the market is likely to continue. And because you can identify that area where the market is likely to continue, you're going to right-click on the chart right at the top of that window, and you're going to activate a limit order, and you're going to sit on your hands, and you're going to wait. And the market's either going to come back to that window of opportunity, and we're in at the top because of the odds favorable momentum on the 13.2. And if it comes back, you're in a long trade, guys. You're in at 79.21, right at that mid-band, inside of favorable large triggers. We're using the areas as a bounce point. We're using mid-bands, fibs, and one-to-ones inside of favorable large triggers, guys. Your limit order goes at the top because of the momentum on the 13.2. Your initial protective stop will go below that window of opportunity where the market shouldn't go. And this is a trade that I'll take 1,000 out of 1,000 times. This is the entry that your first 20 days is going to teach you. This is the trade that when the rules are met typically wins 70 to 80% of the time. You have the advantage of momentum. You have the advantage of a clear path. You have the advantage of an entry where the market is likely to continue. You have everything you need, letting you know that the market is ready to continue with the trend. Guys, if you focus on this trade, give me 20 trading days of looking for those best entries. 20 days. Your risk gets reduced below the reversal bar in the direction of the trade, guys, because you wait for the pullback. Risk is reduced. Because you wait for the pullback, your profit potential grows. We're building trust, guys. Your spreadsheet is I've got 141 pictures of high probability trend trade entries. Just the entries, not worried about management, not worried about winning or losing, just nailing the entry. I'm going to share my spreadsheet with you. I just put it in the room for you. 141 pictures. If you're brand new, if you're in your first week, your second week, if this is day one, go through these pictures tonight. Start burning these into your memory, because the more comfortable you become with that great look, the easier it becomes to get in at the right spot. So guys, that is your high probability trend trade. That's your best of the best. That's all the advantages. And what that high probability trend trade is teaching you is how to read your charts. I am Luciano. John has made it private, so only you guys with access to the room here get to see it in the moment. And then it gets released later, and it's made not private. It's a little attempt to keep people from coming in and trying to get the cow rather than buying the milk, I suppose. You're welcome. But we've got Discord now, where it used to be 50 people. I can get up to 300 in here. Yeah, you won't find it live. You'll only find the afterthoughts. Whoops, and Discord just bumped me out. It heard me talking about it. I know you guys can still hear me. So I'm on my way back. Nobody panic. I'm okay. Like Carol Ann in the television set, right? Let me get my screen up. Almost there. Going live. And we're back. Cool. Guys, your first 30 days, that high probability trend trade is going to teach you to read your charts. What you're going to find is 90% of what you do throughout the day is chart reading, and only 10% is trading. It's waiting for those advantages to be present so you have the best chance of success. I can tell you guys, after class yesterday, I waited almost an hour, maybe an hour and a half, until I finally got my first trade, until my rules were finally met for a trade. Um, and when you can identify through chart reading where the market is likely to continue, you can pick that best of the best entry on the 5-1. When you can identify where the market is likely to go using those momentum indicators, those trigger lines, and Fibonacci, what you do is you develop a plan that allows you to get more out of each trade. And then when you understand where the market is likely to stop, it makes it easy to adhere to rule number 2. It keeps you from trading into areas that may reverse the market. And it also provides you that great anchor for that highest probability trend trade. So if you're brand new with me in here, guys, if you're learning the software, whether it's day 1 or day 21, absolutely. Shogun, I'm talking to you guys really when the market opens, right? I'm talking to you guys. I don't trade and teach at the same time. I'm not that good. Check it out, guys. Termination condition. Look at the bounce coming off that termination condition. And there it goes even more. Isn't it amazing that you knew where the market was likely to go? You knew where the market was likely to stop. And then you had the ability to not get run over because rule number 2 kept you safe. It kept you out of that trouble. Guys, this is all we're doing. And what do we recognize right now? Guys, this is a moment of consolidation, isn't it? The large triggers are flat and lifeless. One of the conditions is that they're strong in the direction of the trade. The larger green, the smaller red, termination condition is held here. Termination condition is held here. Do you guys see that? And this kind of illustrates 90% of what we're doing is just reading charts, waiting for an advantage. What this is doing for me is it's identifying 2 very key areas that are holding. And all I have to do is say, well, I need it to break out above that area or below this area until I feel comfortable with having a clear path. And there's no reason for the new trader to get chewed up in these areas. Remember that odds favorable momentum picture that I shared? Share it again. There it is, guys. This is where most are tempted to predict what the market will do rather than wait for rule 1. And it gets traders into positions without the advantage of momentum, guys. This is where money is lost in the market without a clear advantage of momentum, without a clear path. Does that make sense to everybody? And look at your 5-1, your smaller, faster chart. You can see how kooky crazy it goes, right? Going sideways, making things weird. Whoop, I'm all over the place here. Let me fix that. Just a matter of waiting for advantages. So guys, this is what we do in the first hour. All I'm doing is I'm talking about recognition, talking about rules, talking about the ability to understand when your rules are met. And now it's gift time for you new users. The first thing that I'm going to give you is a high probability trend trade checklist. This is how you can police yourself, guys. This is how you can get that verbiage on your chart every time you annotate it. A high probability trend trade checklist. Is the market coming from a good top or bottom? Was there a termination condition that creates a full reversal? If you check yes, you know it's that highest probability trend trade, right? If you check no, it's okay. It's going to increase the likelihood of success, but it's not mandatory, especially if the next 3 are met. Odds favorable momentum on the 13-2, it has to be a yes. No termination conditions, yes. Area for entry, yes. Guys, if you can mark yes on each and every one of these, the odds of you winning more than you lose goes through the roof. I've never had anybody, and this is a true story, I've never had anybody adhere to this spreadsheet 100%, be able to hit yes every time, and do less than 80% winners. Never, never in the history of my career with this checklist. The challenge comes is when the checklist isn't met and you find yourself bored. The hardest thing that you're going to do, here, you can log out and log back in. I'm not sure if you can hear me, so I'm going to type it in there as well. Sometimes when you lose the stream, guys, it's just Discord being a butthead. So you now have a high probability trend trade checklist, guys. Write these rules on the chart every time you take a trade. It's going to reinforce your ability to follow the rules. And I'm going to give you another checklist. And this checklist has the exact same rules on it, right? Because the rules are important. What do the rules mean? Here's pictures stolen straight from the material. Keep this one on your computer. Study it. What am I looking for? There's those great entries, right? There's the rules for termination conditions. There's your odds favorable momentum. And there's a clinical definition of what a good top or bottom is. Guys, take this, understand these looks, break them down individually so that you can put them together for that highest probability trend trade. And then finally, you're going to piece it all together, guys. Your goal is to have a trading plan. Even the CME recommends, this isn't me recommending, this is the Chicago Mercantile Exchange, that traders should have a trade log. That traders should have a written plan. Well, here's your trade log, everything that you do, so you can go back and gauge performance and patterns. And then here's your plan. This is a simple plan, guys. This is the absolute most remedial plan that ever was. And this is an example how to write it for your first 20 days. Because your plan's going to grow outside of that 20 days as you grow with your ability to read charts. Use the phrase my trade is to define your entry point. Remember, just entry points. That's all we're concerned about for the first 20 days. I would rather see 100 losers with perfect entries than 100 trades with made up entries, because then you're practicing long-term success, because this is a recipe that has been proven over time, back-tested. A lot of people try to prove me wrong, which I love. Do that work, guys. Prove me wrong. But this is the recipe for your highest probability entry. Make sure that the checklist is met. In order to enter, commit to it. Make it personal. The conditions of the checklist must be met. And then take those pictures, guys. My trade entries, right? Nexgen trader favorite looks. Put 4 or 5 of those pictures. Scroll back, find them. Get them into your trading plan so you know exactly what you're looking at. If I click on one of these, it takes me straight to a picture of a 100% rules met, excuse me, high probability trend trade. This is what I'm trying to replicate every time I take a trade as a brand new user. And that's it. Guys, this is your entire trading plan for entries. Half a sheet of paper. Write it out. Make it yours. Steal this one if you want to, but begin that commitment. And then you're going to clearly define your management plan, guys. Management is the second piece of the puzzle. We're eating an elephant today. And have you guys heard that before? How do you eat an elephant? The only way to eat an elephant is one bite at a time. Because if you don't, it becomes overwhelming, right? So we're going to eat that elephant one bite at a time. And when you eat that elephant one bite at a time, what's going to happen is you're going to go from those great entries. You are going to get that best of the best where it's easiest. Sorry, guys, I am multitasking trying to get somebody into the room. And then you need to figure out how to manage those trades. Guys, no sound at all? All right, guys, can you hear me? No volume yet? Yes? Okay, cool. Sorry about that. Telling you guys, some days Discord just likes to mess with me. All right. I don't know where I left off. I don't know when you guys lost me. 9:53 a.m., so only a minute ago. So step one, pick your entries, right? Get the best of the best entries. Guys, I promise you from the bottom of my heart, if you keep it simple, if you stay focused, you'll be nailing entries by the end of your first week. I see it every week with brand new users. And now define your management plan. Guys, this is a mechanical approach. This is a methodical approach. This is an approach that takes your opinion, your emotion, your hopes, your fears out of the equation and just keeps it very pragmatic. Trade two contracts, my initial stop will be 12 ticks. 12 ticks isn't my stop for life, right? It's adjusted above or below that window of opportunity where the market shouldn't go. Once I'm in a trade, guys, that's it. Here, let me do it this way, and I'll show you pictures of what it looks like. And I'll give you this sheet as well. Your initial stop is above the window of opportunity where the market shouldn't go. You've nailed your perfect entry. All your rules are met. Here's your risk. 12 to 14 ticks typically. Once you're in that trade, it'll be moved, your stop will be moved 2 ticks above or below a reversal bar in the direction of your trade. So you've got your great entry, a reversal bar prints, and now you've reduced your risk from 96 down to 94.75. On two contracts, you've reduced almost 3 points of your risk. And there's nothing to do now. You're either stopped out of the trade, and it's okay to take losers, guys. One of the biggest parts of trading is realizing that you won't win every trade. Anything that wins 70% of the time has to lose 30%. It's just a mathematical obligation. The first profit target is $100. If it's reached, you'll move your stop to break even. If the market comes down and reaches that first profit target, the new stop is break even. Guys, you have $100 in the bank. You have zero risk on a trade. They can't hurt you at this point. It makes it easier for you to hold for that second target. You're not going to move your stop again. Either your second target is hit or you're stopped out break even. Guys, in the very beginning, you're going to have a lot of trades that are $100 and break even. Because you're learning to read your indicators, you're not applying any of your chart reading to the management. You're keeping it very methodical. And then if that second target gets hit at $200, as that's a $300 trade. $100 on the first contract, $200 on the second. It's a trade with the advantage of momentum, no termination conditions. It's a trade coming from the best of the best entry, creating a manageable situation. I just gave you this PDF that I'm pulling from. Guys, when you define your management plan, you can alter your plan when you're done with the education. You can change up how you exit the market. Allow yourself a minimum of 30 to 90 days to practice the mechanical approach checklist entry, right? That entry-based checklist or rules-based checklist, and 30 to 90 days to practice that mechanical 100, 200 automated exit. You can adjust your targets based on experience later. Guys, this is your plan for the first 20 days. Just focus on entries. Focus on your learning to read your charts. Most importantly, post your pictures in the room, right? Every time you take a trade, we're still caught in that range on the S&P, guys. Nothing to do. 90% of what we do is reading indicators. Let's go back this way before we take our break. I'm going to circle a tail with odds favorable momentum, and I want to see what it looks like. This is actually a great example because look how this works. I'm going to give us that look. Smalls above, large below, right? 79.76 is an area with the potential to break. Guys, at this point, all you're doing is you're looking for your best entry. This is where I really want to hear from my new users. If you're in here, guys, we're going to find an entry. How do we determine the window of opportunity? How do we get in at the best of the best spot? This is it right now. Smalls above the large, large are wide. They're angled up. The smalls have broken through the area, but the large have not. 79.76 has the potential to break, but it hasn't broken yet. I'm also coming from a termination condition that created a full reversal. On my 5-1 chart, I've got everything I need on the 13.2. Is everybody comfortable with that so far? We have everything that we need on the 13.2 to look for an entry. It'll be medium probability because that area is not broken yet. And my 5-1 screams all the way up and gives me a reversal bar. At the time of the reversal bar, I can use a drawing tool and go from the top of my trigger lines all the way down to the bottom of my trigger lines, right? That's the first step. I'm looking at those advantageous large triggers, but my window of opportunity is from my highest point of support to my lowest point of support. Give me a Y in the room if you see it. It's not from the top of the triggers to the bottom of the triggers. It's from my highest point of support to my lowest point of support. This Fibonacci support, guys, is outside of the window. I'm not looking for an entry all the way down there. We don't want that. I've got a mid-band, one-to-ones, 2 areas of support, and they're all inside of favorable large triggers. I know where this market's likely to continue from. So what I'm going to do is I'm going to activate a limit order right at the top of that window. I'm going to use a line to represent where that potential entry would be. Let me change the color so I don't get it confused with the fib again. I did that one day. I'll make it coral. Is everybody comfortable with what we're looking at right now? Rules met on the 13.2. Wait for the reversal bar. Identify the window of opportunity. Look for an entry at the top of the window because of the momentum on the 13.2. The market begins to come back. Notice how the mid-band is rising up. Guys, it's okay to move your limit order a couple ticks above it. The market's pulling back, and now I'm in the market. All right. No problem, Fala. No, this is not live. This is right around 8:30 a.m. Guys, give me a Y in the room if you're with me. Everything says up. Reversal bar prints. I'm in at the top of the window of opportunity. Where might the market go? It might go all the way down to these one-to-ones inside of favorable large triggers. I have to be mentally prepared for that. But it doesn't. There it goes. There's my first reversal bar. Guys, your entry was at 71. Your stop is at 67. You have 4 ticks of risk on this trade, but it's medium probability, so we have to be willing to manage assertively. Let's see if we get to 81. There we go. There's your first $100, guys. $100 in the bank. My stop is now break even. Market continues up. There's my first trouble spot. Another reversal bar prints. My stop's already at break even, and it's outside of the window of opportunity. Market pulls back. Look at that. Right to support inside of favorable large triggers once again on the second divergence. I can move my stop once again. Now I'm break even +1 behind a reversal bar. The market begins to come up. And guys, look at that. 3 divergences in the same location. What does that tell me on a 5-1 chart? Does anybody remember from termination conditions? What happens when 3 divergences print in the same location? The market may push down, right? That may be a trend ender. And sure enough, we find ourselves out of a trade. But guys, this was a rules-based entry. It was a mechanical management approach. And this was $100 in the bank. 3 divergences, said manage out of that trade. We did. Does that make sense to everybody? This is all we're focused on. Smalls are returning to the large triggers. I'm giving away a little bit of momentum here, right? Make sure it's simulated. If I get a reversal bar, where's the market likely to continue from? Guys, I've got the tail end of momentum. I've got a 100% clear path. And I've got a tiny 3-tick wide window of opportunity where the market is likely to continue should this pullback happen. Can you guys give me a Y in the room? This is what we call a pre-trade picture. If I activate my limit order right above, this is what I would call a pre-trade picture. I would go back and I would start double checking my rules. Do I have odds favorable momentum? Not really, I'm at the tail end. But I have a clear path. I have a reversal bar. I have a window of opportunity. It's a medium probability opportunity, which means that if the conditions change, if I start getting divergences and stuff, I may rethink. Because that's going to be your process each and every day. Starting on the 13.2, we're in an uptrend. We're coming from a termination condition. Let's open that picture back up. If we take that pre-trade picture, guys, put your checklist on it. If you use Snagit, you can just drop it on there. I prefer that you write it out. Use your call-out button. Odds favorable momentum, not quite. Tail end of momentum. But it's not anything can happen triggers. Do I have a clear path? Absolutely I do. We haven't reached an area. This is 100% broken. And guys, this is the important part. Areas inside of favorable large triggers. Yes. Top of the window of opportunity is support. If you go through and you write this out every time you think there's a trade, guys, you're going to be hard-pressed to break rules. You're going to be hard-pressed to not have advantages. You're going to know exactly what you're up against every time you take a trade. And you're going to understand, oh, look at that. You're going to understand whether or not you had all of those advantages. There's my window of opportunity, right? If I entered at support, where shouldn't the market go? Just below these 1-to-1s. If you're in at 52, guys, I just crashed my NinjaTrader. So let's go through it. Here's a lesson as we come into it. What am I going to do to fix that? As I get back in, I'm going to show you how quickly this can be done. I'm going to go to Documents, NinjaTrader 8, Database, and I'm going to lose my cash and my tick out of there, right? I'm going to go to Documents, NinjaTrader 8, I'm going to go to Temp, and I'm going to lose everything in that folder. Gone. I'm going to go to my workspaces, I'm going to kill the recovery folder, and since the workspace went away, I'm going to kill the workspaces folder. Guys, I'm going to close that out. And at this point, I'm going to reopen NinjaTrader. That's how quickly it takes to go through. I think that's my first crash in about a week and a half. Let me put my password in real quick. And NinjaTrader's already on its way back up, guys. Make sure that you're comfortable with that process. How quick was that? And then we'll see what happened in that crude oil. Mine is coming up slow. I'll bring up 7 too, just to be sure. Sorry, guys. I don't have a live chart to show you just yet, so let me go through and click on some of the charts that you guys have shared. And this is what we do each and every morning, is we start talking about not only what we're doing, but what you're doing, and give you that feedback each and every day, making sure that when you take a trade, you have some sort of plan in place, right? So let me look and see what happened. Now here started us off this morning, and I like this picture, guys. This is an amazing picture, because this is a picture where he has committed to rules. He says rule number 1 is met. Odds favorable momentum, smalls below the large are wide, they're angled in the direction of the trend. Rule number 2, he says it has not been met. Why? Because this is an area with the potential to break, but it hasn't yet broken. So he doesn't have the advantage of a clear path. So he's saying, as a brand new user, just not going to take that medium probability trade. Guys, these are some of the best pictures that you can take, because what it does is, even though you're not taking a trade, it's reinforcing whether or not you're going to follow your rules. Safia, you made up all sorts of rules on this one. And let me remind you guys that you're going to begin to trade plans outside of high probability trend trades. And Safia, I'm going to, 2 parts, not a high probability trend trade. That's okay. What are you looking at? Safia, you're looking at all your trigger lines above support, meaning that support's likely to hold. All of your trigger lines are up above support, meaning support's likely to hold. And what you're doing is you're banking on that termination condition theory to get you in. You take an entry, might have been a better entry down here at that Fibonacci support, but you keep your stop in place. You take profits at the first trouble spot, divergence prints, and you get out of the trade. For a trade that doesn't have the advantage of momentum, you said that it did, but I disagree. I'm not sure what an area of favorable is. I'm guessing you mean the mid-band there. But for a trade that's using chart reading more than those high probability trend trades, I think you executed this one beautifully. Nice job. And guys, remember that it's not my job to talk to you about and tell you how to trade. It's my job to look at your reads. The more information you give me, the easier it becomes. I'm not sure that this was even medium probability, to be honest with you, Safia. What you're doing is you're banking on that fib to hold. Even though your smalls are below the large have rolled. You're using that basic termination condition. And guys, it's been a slow day, hasn't it? Not a lot of pictures in the room today. And you took a loss. Rule number 1, no. I love that. My bad. My bad. So what does that mean? Guys, if there's not a statistical advantage in place, sit out. It's tough some days, isn't it? It's tough to sit still. Safia, did you hear the positive in my assessment there? I think it's important. I think it's important that you also hear that support was likely to hold because of trigger line location. I think it's important that you also hear that the small triggers are coming up, giving you a better chance. I think it's a great read with awesome management. So guys, if I tell you it's not a high probability trend trade, it doesn't mean that it's a poor trade. It just means it's not a high probability trend trade. Carl, determination, right? All the triggers roll, and you take a long based on a termination condition. Everything rolls. Carl using his chart reading to get into this trade. Carl, it's nice to see you in class. It's been a while. Guys, when support holds, those smalls come up, they get to the right side, everything rolls on the 5-1 chart. Carl's just looking for an opportunity to get in and make a little money. It's a great trade. And I just got booted. Not every trade is going to be a high probability trend trade, guys. I can't stress that enough. Most of your trades are not going to be high probability trend trades as you grow with the software. Hello, Gary. I just got bumped. I'm coming back. All right, and we're back. Does that make sense, guys? Give me a Y in the room if you're comfortable with that. Couple truths that you have to accept. That the market doesn't provide statistical advantages every second of every day. 90% of what you're doing is going to be chart reading, right? 10% is going to be waiting for those advantages. Having a plan creates an advantage, understanding what it is that you're looking for each and every time you get into the market. Knowing exactly what it's going to take to get you into the market helps you in the beginning to stop worrying about whether you win or lose, focusing on execution, because the execution has been proven to win more than it loses, right? Take a minute to write out a sample plan. What's it going to take to get me in the market? How am I going to manage those trades? And then guys, from this point, it's rinse and repeat. Over and over. Take your pictures. Every great entry has an opportunity for management as your plan grows. As you begin to recognize patterns, put them in your spreadsheet. If you're just identifying termination conditions, put them in the spreadsheet. And guys, true story. These are the hardest days to teach a class. Because what are we doing? We're just being patient. Whoops. Where did I go here? Excuse me. Here's that one in crude that we looked at, right? Losing momentum, smalls returning to the large, losing momentum, smalls returning to the large. If you got in just above support, you had a reversal bar to reduce risk to, virtually no risk, and it pushes down even lower, doesn't it? Happens sometimes. That loss of momentum lets you know that it may push lower. Excuse me. And here's half of my S&P. Bring the other half up. The market is beginning to break out of that range. I still don't have odds favorable. But here, let's see what you did. What is rule number 1? Am I here? Just curious. What is your rule number 1? Strong small trigger? So let's go back, and this is where I talk about annotation is so important. Write out what the rules is. It's not strong small trigger, is it? Let me find the picture. It's strong trigger lines, right? Strong trigger lines. And guys, this is why we write out the entire verbiage. What are strong trigger lines? Well, it has to be a marriage of the small and the large. It's the two working together. This is your strong trigger look. And let's do it like this. So if I compare this look, Mahir, to the look that you had, and we're going to do this side by side. We'll put this one up here. We'll put them side by side. Because I think that this is such a great thing. Here's odds favorable, right? Straight from the manual. You got it. There. Do you see how the smalls have returned? This is where your odds favorable was. This is the look that matches that one. So the only thing that you need to think about going into this one is you did give away the advantage of momentum just a little bit. Now let's go look at your entry. Absolute rock star entry. Isn't that amazing? You nailed your entry 100%. This is what I want to see. This means that you've got the concepts down. You've gotten the most difficult concept down. And this gave you a reversal bar, which means that your 42 stop could have been right there around 51. About 3 ticks of risk. Does that make sense, Mahir? And then with that 3 ticks of risk, let's go back and look at the live. Do you have an after picture? So you took the best entry, absolutely love it, right? That loss of momentum ended up pushing you just a little bit lower. But you can lose 2 or 3 ticks on this one. And then when everything says up again and all your trigger lines agree again, there's a continuation style that's looking for a stab back to the area. So let's see what you did on the management side of things. All right, you let it run just a little bit longer, right? No worries. It's not bad. That's a lot to think about for a new user right in the moment, isn't it? I think it is. But what'll happen is eventually you'll take this one, you'll lose a couple ticks, and you'll just wait for the best of the best again. Because the conditions really didn't change. Let's see if it stabs back right here to 58, 57, and then finishes the move up to the target. Joel, same trade. Why did Joel take the trade? Because it's a great trade, right? Whoops. In at 57, and you're out at 46. And once again, guys, when you're giving away, and I love that you annotated this. If I'm giving away one of my advantages, like if I am willfully saying to myself, I'm cool taking this trade without the best looking of momentum, because guys, it was still a great looking trade. This is where the second piece of the puzzle, this is where that management is going to help out, because you turn a 15, 16, 17, 18, 19 tick loser on 2 contracts into just 2 or 3, and then you just wait for things to come back and either give you another opportunity or you wait for the next best opportunity. Guys, I don't think that there's anything wrong with either of those trades. I think that the momentum was going away and it created a little more of a push. And when it created a little more of a push, it just got you. But even your 5-1 told you that the market wanted to react there. There was just some sharks that needed it to go just a little bit lower. Does that make sense? I think it was an outstanding trade, and I think it had an awful lot of advantages. Should have been the winner. Shoulda, woulda, coulda, right? What do they say? Wish in one hand, poop in the other. See which fills up first. So, Mahir, what you just said, what I just heard, and I may be wrong. What I just heard is you're saying that even with weak triggers, with things changing, with everything working its way down and the small triggers so hard against me, I'm going to develop a habit of just leaving bigger stops, hopeful that the market changes direction. Do you see how language? It's easy to go back. Watch this. If I just would have jumped in at 31 and gotten out at 51, I could have made $200, right? If I just would have went short from 27 down to 05, I could have made all that money. Or I just kind of have to say, yeah, if shoulda, woulda, coulda. But it becomes a slippery slope, doesn't it? Because the next time you leave that big stop and you get run over because of the loss of momentum. So I think it's a great thing. So what you're doing is define what works consistently, right? Define what keeps you in at the best spots, gets you out at the wrong spots, and then focus on execution. Well, not even. So if you're doing that really, really mechanical, let's go through it. Here's your entry, right? So we'll make the entry orange. Your initial stop was probably somewhere right around there, right? Outside of the window of opportunity. Once that reversal bar prints, there's my stop. 12 ticks initially, but what does the rules say? Outside of the window of opportunity. So it probably didn't even need to be 12 ticks. Once the reversal bar prints, I'll move my stop. Once I've moved my stop, it either gets me or it goes to my target. So if we look at that one, if you're in at 52, well, let's go to the other side of it. Are you ready? Mahir, what was your entry price? I just want to make sure. I want to see. Were you in at 52, 51? 52 probably? You were in at 54. Okay. So you were in high, weren't you? Joel, what was your entry? Joel, you were in at 57. All right, so let's go back to the coffee mug everybody's getting for Christmas. A tick or two above support, guys, is 53. So we'll go off 2 ticks, right? 2 ticks is 53. Does that make sense to everybody? Here's the highest point of my window. I'm a tick or 2 above it. Does that make sense? That's just that rule number 3. Use a limit order to buy or sell a pullback at an area. It's okay to go a tick or 2 above because they're areas. So if I'm in at 53, The market makes it to 63, guys. That's that $100, right? You sure do. You're pulling synthetics over to your 5-1. I'm not using synthetics on a 5-1 just because I don't need them. I don't need to know what's going on the other charts on the 5-1 because I'm using my areas. So right click here, and you can get rid of that tick replay. But I would go back and maybe reload to the newest. Well, the CNL, crude and ES are different markets, but that newest workspace from the resources page is going to pull those synthetics off. But based on your chart, you want to combine the two workspaces into one. Then what I would do is what you need to do is you need to take one workspace, right? And then you'll have to build all new charts for the other one. So you can use the same settings. But I'm not sure that this will show me which template I have on there. But I would try downloading. Just right click on your 5-1. Right click and go to templates, load. And go to that 5-1 Rinko. Dynamic bar chart. And click load and see if it gets rid of those synthetics on there. And then using that one should get you where you need to be. Guys, termination condition, right? Pivot stop out at resistance, weak triggers, multiple divergences, right at a key area. Nobody's going long here, are they? Everybody's respecting rule number 2. What about the 13-2? Are we talking about what we're looking at, or are we talking about building a 13-2 chart? Oh, right click, template, load. 13-2, Nexgen Dynamic Rinko Bar Chart 2023. That should be it. And then if you need help, get with Jason. Termination condition, no long trades until rule number 2 is met. Guys, termination conditions. Which divergence wasn't printed? Steven, will you show me a picture? This divergence on the 13-2? Are you on Eastern time frame? Are you 10 days back? Did you leave it running overnight? Did you delete your cache and tick? We may be a tick off. And if we're a tick off, that can make a difference. It shouldn't have changed the trade, but usually it can mean that we're one tick off. And I just cleared everything out and reloaded, so I'm going brand new fresh from about 10:04. And then guys, look at this. Just stuck in the range, right? Rules not met. Next-gen users, you haven't taken a loss because the rules haven't been met. Look at all those divergences. What a fight you're witnessing. Let's see who wins. I have no idea. I try not to predict. Guys, I'm going to take a minute. ES is untradeable right now. Excuse me. Smalls are down, larger up, synthetics are up, larger up, smaller up, but look at those termination conditions. Man, it's ugly. That's what we call the go make a sandwich pattern, right? You feel like it's going down? That's weird because I feel like it has a better chance of going up. I don't know. The reality is I just don't know. Stephen F., best thing you can do is get with Jason and Tech and make sure that I'm not missing something. As much as I hate to admit it, guys, I'm the worst tech guy in the world. I'm really good at reading indicators, but I'm really bad at fixing. That's okay. That's his job. Wear him out. If you guys don't wear Jason out, Jason doesn't have a job, right? He's amazing. But he relies on you guys being needy. And if you're not, well, what's he going to do? Guys, I'm going to take a minute. I'll be back in just a few. If you take a trade, post a picture. If you don't take a trade, feel free to post a picture of your charts. Let me know what you see. Tell me what you see in all this mess. And then I'll be back in just a few minutes, and we will keep things moving forward. Back in a few, guys. All right, guys, I am back. Let's get moving forward again. What do you say? It's funny. I was just telling my wife, I said, with a market like this, where it's choppy and inconsistent and rules aren't met and we're just being patient, I said, it's like teaching people how to bird watch in a field with no birds, right? Um, Guys, we can talk about the concepts all day long. We can talk about getting in at the right spot. We can talk about the rules. And some days the market doesn't give us everything that we want, and that's okay. And it's kind of a mix. Some days it's amazing, and some days you have to be patient. And that's kind of life. One second. All right. Yeah, fishing when the fish aren't biting. Um, so, guys, I rely on your charts a lot to talk about the patterns, and I rely on your charts. I rely on the live market. I can tell you guys right now, what did we reach? Brand new users. What do we call this? Area of resistance, absolutely no trigger lines go through. Let's play if then. Is rule number 2 met? Anybody? No. If rule number 2 isn't met, what has to happen? Let's play if then. Smalls have to get above the area. Large have to get above the area. You guys have checked out. And then we'll look for opportunities, and that's okay. It's okay to wait. It's okay. And rule number 1's not met, right? Guys, sometimes when there's nothing going on, there you go, Ron. If there's nothing going on, my chart goes back 10 days. So from this picture right here, why don't we study? I'll take a picture of it, and I'll use this call out button. Guys, tell me if I write something wrong. All I'm doing right now is identifying key concepts. All I'm doing is just writing things down. What do I see? You guys ever see somebody doing practice swings, right? For every one shot a golfer takes, he probably takes 5 or 6 practice swings. These are your practice swings, guys. Identification. If you're brand new, day 1, day 2, day 3, isn't this pretty awesome? Look at all the information you can get without having to take a trade. Put it in your spreadsheet. Put it under chart reading. And now I'm just going to scroll back. And I'm going to take another picture. Can we call these? You jinxed it, Ron. That termination condition hold. I'm not even watching, guys. What I'm doing is I'm getting better at reading my charts. This is a PSO. What's a PSO? Pivot stop out. At support, guys. What a beautiful look. And look how the market reacts from a pivot stop out at support. What does this let me know? This lets me know that if I go back and I begin to see these pivot stop outs at support or resistance, then it probably has a little extra strength. Guys, this is the study part. Whoops. But this is the study part of what you're doing, is going back historically and identifying the concepts, right? What started the downtrend? A pivot stop out at resistance, all the way down to support. What got us up to that pivot stop out? Divergence at support. Are you guys seeing a theme here? There's a potential entry. Indecision, right? Trigger lines don't agree. Pivot stop out right at 1-to-1s. Mid bands, but a termination here. Oh, and it makes it down to that next key area. There's a potential entry from yesterday. Everything overruns, loss of momentum, takes it right back to resistance. Guys, if you take just a minute and study these over and over, you're going to begin to recognize patterns. Here's one of the most important patterns I think that you can recognize. Price accelerates away from the large triggers. Do you see how the large triggers don't follow along? This is what we call the gap theory. And the gap theory just says if price pulls away from the synthetic triggers too fast and too far into a Fibonacci area, it'll snap back to the triggers. Price accelerates all the way to it, triggers don't follow, and it snaps back to the triggers. Guys, this will keep you out of short trades. Price accelerates all the way back to resistance, the large triggers don't follow. It keeps you from looking for a long trade. This is a pattern that happens quite a bit. Price hits resistance, pulls all the way back to the trigger lines, full bar away. Keeps you from looking for that long prematurely. Here we see it again, mid-band and support, large triggers don't follow. Price snaps back all the way to those trigger lines, keeps you out of a short trade here. Guys, the patterns repeat themselves over and over. Resistance is reached, triggers don't follow, snaps back, finishes the move to support. That's your trend ender. Termination conditions holding for now, isn't it? Guys, that's crude oil. Let's look at the S&P. There's one of those 50-50 trades, right? With a loss of momentum. But let's see if these patterns repeat themselves. Price reaches resistance, trigger lines don't follow. It closes the gap back to the trigger lines. As we scroll back, support, termination condition started the move up. Resistance, termination condition got us all the way back to support. Price reaches resistance, trigger lines don't follow, closes the gap to the trigger lines. Price reaches mid-band, right at resistance, trigger lines never blink, small never get above, continues the move down. Price gets to the mid-band, large triggers don't follow, full bar back, closes the gap, keeps you out of that short trade. See it again right here. Does anyone else do this? Just scroll back and look for patterns that repeat themselves. 50-50 trade, right? Small triggers below the large are wide, they're angled down. There is an area that has not broken but has the potential. And that loss of momentum pushes you right up past that mid-band. Another pattern that you can recognize is when the market consolidates like this. It's what you call a fake out breakout. Has anyone ever heard that phrase, the fake breakout? Those sellers push as hard as they possibly can. The buyers let them think they have it. and then just apply the pressure. Guys, my least favorite medium probability trade in the history of medium probability trades is a 50-50 trade after consolidation. If it wins, it typically wins huge. But if it loses, it typically loses quick. Becomes a little bit of a gamble. Gary, you've seen it. All right, so I'm going to take the pressure off of me, and I'm going to put the pressure on you guys. What do you want to talk about? And Tony, it's not guaranteed. But this is a 50-50 trade, especially with divergence, after this much consolidation. And how many areas haven't broke? 33.75, divergence low, and support. You're counting on 3 areas breaking, right? Doesn't mean that it won't go down, but that's a good indication that the buyers may give it one more push. Too soon for longs. Not the best look for shorts, right? Guys, when we talk about shorts, when we talk about 50-50 trades, with an area at the, I'm just going to go through all of my pictures and talk about them at this point. Does anyone ever say this? My money's worth. My money's worth the perfect entry on the 5-1. If that area hasn't broken, if I don't have the advantage of a clear path. What's a perfect area or perfect entry? Well, I've defined it as no divergence, strong triggers, and a small window of opportunity. Guys, if I have a maybe trade, my entry chart better be perfect. If I have a maybe trade, my entry chart better be perfect. Strong triggers, no termination conditions, small window of opportunity. It's okay to insist, but you're going to have a little devil on your shoulder saying, hey, Tony, it's not perfect. Take the trade. Hey, Gary, it's not perfect. Take the trade. You've been bored. We haven't given you anything for an hour and a half or 2 hours. Hey, here, it's a termination condition. Trade into it, right? You haven't had a trade in a while, and your last trade was a loser. You have to take that back. Guys, that's that little devil that you're going to learn to control. Too soon for shorts, right? But definitely no longs. If this resistance is going to hold, guys, this picture is called might versus has. That's how I have it labeled. What is this? This is resistance that might hold, right? All the trigger lines are up. The smalls are outside of the large. Everything says up, but I have an area of resistance with no triggers through it. Sound familiar? It might hold. If it's really going to hold, if this resistance is really going to be resistance that turns the market, my small triggers will get to the correct side of my large triggers on a smaller, faster chart. My smaller, faster chart triggers will pinch, will roll. And guys, then the area is held. The difference between I think resistance will hold and resistance is held is told through the trigger lines and the relationship to the areas. This price where you're hoping it holds is typically really close to this price where it actually holds. My large triggers are still up, aren't they? I got the small triggers on the right side. We're halfway through the equation. But if this is really going to hold, these are going to roll. Does that make sense? Guys, that's the patience piece. This is the difference between getting your butt kicked 5 or 6 times via opinion and actually having a market that holds and rolls. And you can use that same concept for continuation. If you take the perfect long trade, Mahir, Joel, you took a great long trade, right? It just didn't work. It pushed lower. Doesn't this picture look almost exactly like the long that you guys took? If the rules are still met, if it hasn't changed, wait for things to agree again. Get a little snap back to those small triggers. You guys want to see something awesome? These are all patterns that repeat themselves. Guys, there's your entry, isn't it? There's the trigger roll. There's the pullback to the small triggers to get you to the area. Pretty cool, right? Every indicator on every chart set up. Those damn sharks just had a little business to do before they gave you the opportunity. It's about a 5 or 6 difference in price. Have you guys seen that before? I just put the picture in the room. Take that picture. Open it up. Let me see if I can open it up here. Steal the address. Go to your spreadsheet. You're not trained, not yet, but you'll get there. What type of people would be market markers? You mean makers? Who moves the market? Is that what you're asking? You know I get to share my favorite picture, right? Actually, I'm going to give you 2 pictures. The first picture I'm going to give you is this is pretty much it. The large crowd wins, guys. Your 13-2 chart, your higher time frames, guys, this is the large chart. These are the people where everybody collectively says, let's go up, where everybody says, let's establish momentum, where everybody says this is the direction, where everybody says, hey, there's no key Fibonacci areas to react to. Your small crowd, these are the guys that are trying to push it. So there's the first answer, Meow. But the second answer is the deepest pockets win. The big money investors, the guys that are taking profits at these key areas are freeing it up to change directions. The guys that are buying thousands of contracts at support are the guys that are pushing it off of that area with all that momentum. There are what's known as institutional traders. Those are the guys that are moving the market. Those are the guys that are creating the momentum. Those are the guys that are reacting to the Fibonacci areas. Mier, our job is to be a remora. Is everybody cool with marine biology? What does the remora do? The shark tears up a tuna, and the remora eats the scraps, right? John told me he hates that because it makes us sound like bottom feeders. We're not bottom feeders. We're advantageous, right? We're taking. So price hit resistance, right? And it reacts. Look how it reacts. That's the small crowd. Not sure what's going to happen with the large crowd. In this one little area, it looks like a seismic graph, right? The smalls are through, but the large are not. There's not momentum. The sharks are reacting to the area, and there's a huge fight between buyers and sellers right now. We can guess and hope that we picked it right, or we can simply let the area break or roll, right? We could hope that this 50-50 trade works, or we can wait for a clear path. Guys, if you took the 50-50 trade, look at how divergences, small triggers inside, started to tell a different story. After consolidation, guys, this is either such a home run or it turns out to be a pretty quick loser. Because your sharks have been fighting. Ready? Let's play shark. Shark picture. And guys, this is what we do. When there's nothing to do, turn it into a study time. What are we seeing? Termination condition pushes the market all the way down. So who has the advantage here? The sharks do, right? The selling sharks push it all the way to support. And then the buying sharks say, well, I want it to go up. Right to resistance. Next-gen users, your trigger lines say, don't believe it. And the sellers push back to a higher support. And then the buyers push back and they still can't get above that area. Do you see the consolidation? Guys, you're looking at, this is Tyson and Holyfield duking it out. And the sellers go, oh yeah? Ha-ha. And they make it right to those one-to-ones that print in real time, guys. Your software identifies these changes as the market's going on. And none of your trigger lines follow. And the buyers go, dude, seriously. Ugh, that's the noise they make when they push it. Right to resistance and the trigger lines don't blink. And the sellers say, oh, we got these mother scratchers now. And they establish momentum and they establish direction. And the buyers go, you know what? All of the sellers are going to commit at this low that we've established. Let's let them think they've won and more sellers dump their market. And then let's kick their asses and take all their money. Not necessarily. And Miel, there's psychology that goes to it. Doesn't it make sense, just based on this one picture, that the people that control the market, they're aware of these areas. Sometimes they're areas for taking profits. Sometimes they're areas where they want to get into a position because the price has moved low enough that they can get a better price so that they can take profits later. These guys have a plan. When John Novak wrote this software, I love telling the story because, guys, I'm not going to lie to you. I'm still absolutely blown away by the accuracy of the software. John had a friend in the pits in Chicago, and when he was perfecting the algorithms to get everything to where these confluences would come together as key areas, he would call his buddy and go, hey, these are my prices with fibs. The guy's job in Chicago was to know where the institutions were going long and short, where their key areas for transactions were. And John found himself typically within 50 cents. Because when you open up your software, guys, these fibs aren't arbitrary. These fibs are coming from a collection. Let me see if I can find the picture. Your market is analyzing data set for the last 10 days, and there's literally thousands of individual calculations. And if you spent several hours prepping 10 time frames of data, you could also calculate all these manually, right? The magic of Nexgen automated Fibonacci areas depends on two things. Which lines are the most important? Which prices have the highest concentration? Guys, this is what your software looks like when it's calculating. He's my big brother, Miel, so I'm not going to confirm or deny that. He's just a jackass that used to punch me in the arm when I was a kid. But I had no idea he was this smart. But this is what it looks like, right? And all of this noise, John Novak's created these amazing areas for you to trade from. Guys, if you're new to Nexgen, I'm going to encourage you, go back. Areas break, otherwise we'd be caught in the same range. So what John said is let's create a set of rules using this moving average, this momentum indicator, that'll help us decide when areas are likely to break and when they're likely to hold. And then let's take it one step further. Let's take areas likely to hold and break. Let's create rules that are repeatable, duplicatable, that can be back tested over time. And let's create a set of rules that gives my users the absolute best entry for the highest chance of success. Guys, this is what Nexgen does. And it all stems from this. And I'm sorry, I don't know squat about tech, guys. I couldn't do this to save my life. But what I can do is I can read indicators and I can recognize advantages. And the hardest part of being a day trader, the hardest part for me is making sure that I'm committed 100% to rules adherence. One of the biggest challenges that new users have is not knowing what they're looking for and then not waiting for what they're looking for. Would you guys agree to that? 50-50 trade. Not the best look. Divergence is printed. How many people took this short because you got sick of all this nonsense here? How many people got in and maybe got stopped out because you got so tired of waiting for those advantages to be present that you broke your rules? I've done it. I've done it 100 times. I'm not proud of it, but I've done it. I'm human. Check it out, guys. The area broke. The smalls got above the large. It happens. Sometimes it takes a while to happen. We are officially in the last hour, ladies and gentlemen, which really means for you guys, tell me what you want to talk about. I'll keep going through my pictures. If you're finding this helpful, at least let me know. Let me know that going through these pictures is good. And guys, I'll do this all day when there's nothing to do. I've got so many pictures. You were playing it in at 33.25. You skipped it due to the large trigger still above the fib and divergence. Saved your day. And now that's going to let your winners do great things for that bottom line, right? Because now you're not fighting back. So Mary Rocks, first of all, welcome back. Haven't seen you in a while. They're called small swing 1-to-1s. So where the yellow are for larger swings, and guys, again, this goes back to me being kind of not real technical. This feels like algebra to me. What I know is that on a large chart, on a 13-2, these are a great place for a bounce. Not necessarily a trend ender, but a pretty cool place to maybe push me back to an area of support inside of favorable large triggers with the momentum. And if you scroll back and look over time, you'll see them come up. When they correspond with areas, sometimes it's a good spot for a bounce. And we don't have a lot of them right now. Not a lot of small swing 1-to-1s. Sometimes they never even come into play. Let me see if I can find an example. Right here, they were enough to give a bounce, continue the move. Right here, they had very little factor. So for me, Mary, I don't give them a lot of weight. I love it as an area for a bounce. And if they're on my smaller 5-1 chart and they line up, Gary says with odds favorable, with every chart agreeing now and momentum on every chart, he can't wait for support inside of favorable large triggers. There's one of those pre-trade pictures, right? Hey, Dave, good to see you in the room. Dave, sniper exit or sniper entry. Everything starts to clear. You take advantage. Making that money, right? Everything starts to clear. You take advantage. Dave, good to see that you're finding a plan that works for you. Taking those basic concepts, right? That chart reading, and turning it into a trade that makes you feel good about what you're looking at. I love that, guys. That's the growing process. Here it is on the chart. Support's holding. Everything says up. Every chart agrees. Dave says, let me just get above that area and make a little money. This Sunday, I put this together, guys. Just a little something, talking about advantages. One of the things that new users do, and I think that we've all done this, is we start to play a game of good enough, right? And sometimes it is good enough. And chart reading will help you identify whether or not it is. But when you can check all 5 boxes, guys, don't miss a trade. When everything says go, make sure that you're going, because this is the one that's been proven to win 70 to 80% of the time, right? When everything looks absolutely amazing, guys, don't miss the trade. Because what happens is when you miss this trade because you overthink it, because you're not comfortable with your rules, you start to take this trade where things aren't nearly as pretty. When you're talking about 50-50 trades, it's okay to let it be perfect, but they are medium probability, not high probability. You're still going to lose some of these. But let it be perfect. Make sure that you have the strength. Make sure that you're coming from a termination condition. Make sure that your window of opportunity is virtually nothing, and make sure that you have room to get to that next target in case things change. And these are all trades that people put into the classroom on Friday that I just wanted to talk about after the fact. When everything says go, every box has been checked, guys, and that long doesn't work. Mahir, Joel, there's that stab back to the small triggers that gets you back into a great trade and get you to that next entry. That's that continuation look. It's okay to study it. Losing momentum pushes beyond the best area. We saw this one earlier today, right? Guys, go through and just study. Go through and study. I like this one a lot because this one is the 50-50 trade, right? I want to take a picture of this picture and I want to talk about. You've been patient, you've been waiting. There is a lot to study. Eating an elephant, right? So Mahir, entries. Entries have to be first. You're killing your entries. Great job. Then you go to management, right? Keep it methodical, keep it mechanical. But when you're learning to drive, do you guys remember when you learned to drive a car? Most of the time you didn't remember the drive from A to Z because you were so focused on not running into something. But 2 months into having learned to drive a car, you start to notice the things on the side of the road. You go, oh my gosh, there's trees here. I never knew that. Yeah. But the more comfortable you become with anything, the more you get to see outside of it, right? Trading is no different. This is why I try to keep you guys so focused in the beginning. Focus on what's important. Gas, brake, don't hit anybody. And then you're going to start to see these patterns create outside of it, guys. This is a 50-50. I love this look. With no divergence and strong triggers, guys, this is your best shot at success. Once divergence prints and those trigger lines split, it's poor. Once another divergence prints, the smalls are inside, this is your market telling you, guys, just stop. Give it up. But what new users do is they skip this one because they overthink it. Then they try this one at the top of the window and get stopped out down here at the bottom triggers. And then they take this one because they're like, you know what, to hell with this market, they owe me. And the only one that they would have got paid on is the one that they skipped, the absolute best opportunity. So you're going to start focusing on recognizing the best opportunities in the moment, and you do that through the repetition. You do that through the picture taking, and most importantly, you do that through sharing in class and getting feedback, not only on your trades, but on everything that you see. Guys, I was able to go back and take pictures together as a class just looking at the 13.2. Lessons in momentum, lessons in termination conditions, lessons in the gap theory, lessons in pivot stop outs. So you don't have to take a trade to learn. And here's another one of those, right? With those split trigger lines, accepting risk is what I call this trade. If you get in at the bottom, you have to be prepared to have your stop outside of the window of opportunity. When these trigger lines are split, that window becomes bigger. So all I did is I just started taking pictures, guys, over and over. Hoping termination conditions break is one of the biggest P&L killers for new users. Hoping that that termination condition isn't really a termination condition. So guys, I put these together as a PowerPoint because I thought it would be fun. But that's how I study. I market replay. Did anybody catch the long? May not have gotten you, huh? 10K, are you going to show me a picture that long? 10K says, you know what, Mark? I'm going to catch that one. You held your stop a little longer. That was that one earlier, right? You said, I'm going to get in. And because you're in at 50, great entries create manageable trades. You weren't worried about keeping that 12. What a great lesson. No divergence, strong triggers. You held your ground because of all the conditions. And you took it all the way up. That's that arbitrary stop, isn't it? That's that, man, I don't want to give it back. It always finds you when you do that. Every time. Great trade, 10K. Dave. Getting in above the areas, right? I like this one. I like that mid-band. Makes it a bit more manageable, especially with 3 divergences. I like what you're doing, though, Dave. Great job. Chart reading. Gary, right on that mid-band. That's the rules-based entry, isn't it? And then what's the market doing from here, guys? I got a lot of pre-trade pictures right from the mid-band. Boom. And here we go. If you were in at 98, you already made $100. So let me ask you guys, is it worth the wait? Is it worth the wait for the best of the best? Is it worth the wait to have those advantages? Is it worth the wait to take the best entry so that it becomes a manageable trade? Your next fib is at 81.33. Gary's looking for the large one. I'm not sure why you got out there. 7 ticks, 7 ticks. Just trying to beat the apex system. Right at that. I like it. $140 in the bank and no risk on a trade feels good, doesn't it? So what did we do? We decided that we knew the trend, right? Everyone knew the market set up. Everyone knew that the smalls were working their way outside of the large. Everyone knew where the areas for entry were. You just have to execute. You just have to trust it enough to execute. Do you guys want that PowerPoint? Just look at them. Guys, that's a great exercise. Go back, build your own PowerPoints, right? Do this every weekend. Go find 12 entries. And guys, do the ugliest entries you can find. Do those lower probability entries. And in the moment, when you annotate a chart without the emotion, so let's talk management, guys. What does the 13.2 say? It says up. Okay. What does the momentum say? It's up, not the greatest, but it's up, right? Small triggers up, large triggers up. What about the 5-1? Small triggers up, synthetic triggers up, large triggers up. Is there anything that says down yet? 3 divergence. Well, we've already broken these 2, right? Just like areas, when the trigger lines get above a divergence, it's a reset. So right now, we're at our problem spot, 81.14. Yeah, so you had 2 divergences on your entry. The third divergence printed up here. but your smalls and large were already breaking the previous. So if you took this one, 81.14 becomes your area to watch, guys. But every indicator on every chart says up. And if you didn't take the trade because of the three divergences, that's okay. So the lesson there is that when the trigger lines begin to break a divergence, it's just like areas. It's kind of a reset. Does that make sense? But if you just freeze frame right now, can you find anything on any chart that says down? I can't either. Does it mean that it won't go down? Not at all. If it does go down, where's a good opportunity for it to go to? Maybe a mid-band right at the bottom of the triggers. Can we agree to that? If it does push down, this is the most likely area for it to continue. So guys, where should your stop go? Should it go above the box? Should it go in the box? Or should it go below the box? Below, where the market shouldn't go, right, Tony? Because if it goes below this box, you don't want to be in that trade anymore. Does that make sense? One of the hardest things for new users is to start thinking pragmatically about what they see in the moment. Everything says up. Everything says up. Why on earth would I put an arbitrary stop somewhere where the market's going to potentially come get it? Bingo. Took 2 hours, but works in NASDAQ too. Nice one, Steve. It's hard to sit in a trade for that long. It really is. Guys, my 8 just crapped out on me again. When I draw on my charts too much, and I'll do that sometimes, I'll forget about it and I'll start drawing on my charts and it'll kill it. Nice job, guys. Bingo. That's one of my favorite words in the English language now. You will hear this term many times when a profit target has been reached and filled on a winning trade. We'll let that market come up. Let's reiterate a little bit. What's your path, guys? This is what we do every day. 804. So you have the, that's 14 trades. Is it 804 each, or is that the accumulation? It's awesome. $800 a day. Is it just me, or is that $4,000 a week? It's a $16,000 month. Most people could live off of that. Most people could feel pretty good about a $16,000 month. How do you get there? ASAP. Post your trades in class, guys. Everything you do, win, lose, or draw, post it in class. Post pictures in your spreadsheet, and then don't just put them in there and forget about them. Who goes back and studies their spreadsheet every morning before they start trading? Who looks at what they did yesterday? Because if I look at my yesterday and I keep seeing indetermination condition lost, term lost, term lost, term lost. Well, guys, I know that I got to fix something, right? And if I go back and I see rules followed 1, and every time the rules are followed, it looks exactly the same, I'm teaching myself to win. I'm teaching myself to take the right trades. Joel, your 13.2 hadn't changed a bit, had it? From the time of entry to the time of exit, zero change. What's the only change that happened? And Joel, this is good management idea. The only thing that's changed, beautiful entry by the way, is that now your small triggers support the trade as well. Never get mad about making money though. Never get mad about making money. And then there's that another divergence and it pulls right back to the mid-band, doesn't it? And we'll see what happens. So guys, learn the trigger line and Fibonacci rules for when it's okay to trade. That's the key, right? That's the start. Know your rules. Mary, only one trade for the day? I love it when you guys tell me that you only traded once and you made money. Strong triggers, no termination, entry at the pullback. Beautiful. Targets hit, stop outside a box. Do you guys like that box theory for moving stops? Mary, what a beautiful trade. Nicely done. Dave's like, you know what? Mary's pretty cool, but check this out. So Dave, you're in. Stop keeps you safe. There's your first profit. Divergence prints, and your stop is right at the mid-band. We're going to develop a little trust in that mid-band, Dave. Because in at 81 flat instead of 04 turns this into $100 instead of 60, right? And it makes it easier to grab 200. Go ahead and make it a $300 trade. Get out. Wait for the next entry. You have to take weeks of breaks before you can stay calm during trading. So you get excited. I used to get excited. And look at that. 2 divergences with the smalls inside. It gives it one more push. Notice how your trigger lines don't break that top divergence. You get your third divergence, small trigger lines inside, and there's your lower push. So Rain, do you see how the trigger lines can't break the divergence? Pretty cool, right? Now it's your third for real. And you notice how the area is no longer inside of favorable large triggers? Can you guys do this in the moment? And then the question is, who said good enough? Because they watched other people get paid? And who said good enough? Jose? Whoops, guys, Discord just bumped me. I'm telling you, I'm having some challenges here today. I can't wait to show this one, Jose. Almost there, guys. Be right back. Excuse me. Jose, look at this. Entry, money. You took your exit right at support, Jose. Hey, fella. Guys, I really do believe, and this is just me, if you're saying to yourself, I'm going to get out right here, if this is where your stop is, it has to make sense, right? Why not just take profits? Like if you're saying, I'm going to get out here, but I'm going to get back in, and you got in all the way up here, why give that away? Be willing, if you know you're willing to get back in, take your money and just get back in. It may not give you an opportunity. I like this one a little better. And then you get back in, and then you make it on the way up again. Jose, it's a great job. It's heads up trading. It always makes me sad, though, to see a stop 2 ticks above an entry. Because chart reading told you that that was your entry, right? That's the only thing I can say about that one. Great job. And then price reaches support. Guys, there's that gap theory. Is it going to close the gap? What do you think? It's a bad top, not a termination condition that creates a full reversal. It's Fibonacci support. The large triggers are a full bar away. I know it because it's above the reversal bar marker. Thala, you were asking me about this short earlier. That's the same look, isn't it? Right there. That gap theory says that this is an unbelievably low probability attempt. And now we're going to see if it works. It may work. It may not work. But patterns tell me that that's a pretty good shot of where the market is likely to go. And to be honest with you guys, it's got a better chance of finishing this move to 81.33. Remember the fight we talked about? Buyers take control. Sellers from the middle of nowhere say, ha ha, and push them down. Or buyers are taking profits. Deep pockets are doing something right here, and it comes all the way down to your amazing Nexgen key Fibonacci support. None of the trigger lines have broken through, so we know not to go short. The gap theory is in place, so we know that it's likely to come here. And because you guys are unbelievable students, you know that when a bad top in an upward trend hits support in just about that mid-band, it loves to finish the move up here to resistance. Let's see if patterns repeat themselves. But if nothing else, it keeps me out of the short right here initially, doesn't it? When I have a pivot that comes from nowhere, and it comes all the way back to support, the trigger lines don't follow, it's a termination condition. One of the patterns that I recognize is the market loves to finish the move to key Fibonacci areas. Obviously, it's not a trade yet, right? But isn't gap theory enough to keep you out of this short? And guys, then we'll re-gauge. We'll come back through and we'll read indicators. And we'll say something like, if the small triggers break the area, well, then maybe they're just pushing down. But there's your gap theory, prophecy fulfilled. And we'll see if it gives a trade opportunity to potentially. As when I was sitting in the same chair that you're sitting in, when I was brand new to the software, John Novak taught this class. And John Novak used to say, shorts are doomed right here. They're not going to work because of the gap theory, because of the termination condition. And I'd go short right here. And I would curse him for messing up my trade. But what I realized was that he had spent time studying patterns and creating expectations based on the patterns. So this picture right here, is there any reason for you not to take it? And then draw those same arrows and say likely. I used to think John Novak had a crystal ball. No, I don't mean take the long, Thala. It's a downtrend with odds favorable momentum. Now, Thala, if you create a set of rules that for yourself, have fun. But I'm going to share this to screencast. And once I share this to screencast, I'm going to put it into chart reading. Thala, do you have rules for it? Nope. Do you think that you could build a set of rules that says if it's a bad top, if it's support likely to hold, if this happens? And Thala, this is where those of you that are adding, here's an 8-range chart, right? This is what you're going to add into it later. So Thala, based on everything that I know about the gap theory, let's go down the line. Bad top, support, large triggers a full bar away, support, and a pivot stop out. Couldn't I say, Thala, hypothetically, that if I get on an 8-range chart a long signal from this area that has the potential to hold based on all of those chart reading, maybe I'll take one shot at the long? Profit target reached. Guys, this is advanced. But didn't it do exactly what we expected? Used to blow my mind, guys. This is just time. It's time with the software. But you brought up a great point, though, Thala. Just because I can create this expectation, I'm not just going to jump in. I have to have a set of rules for it. So for me, the set of rules to take that long at support, just so you know, is everything begins on my 21.3. Watch this. If on my 21.3, everything is up, smalls are on the top side, everything is clear, I haven't reached resistance, it's just it's an edge trade. It's a continuation trade. I'm giving you the rules right now. It is advanced. My higher time frame says this market is likely to go up, doesn't it? Does everyone see that? This is a 21.3. Guys, the patterns that you see happen on every chart, every time frame. So it starts at the 21.3. The 21.3 says the market is likely to go up. I've cleared all my trouble spots, and my triggers say that 80.09 is likely to hold. I'm going through them right now. I'm on rule. Thala, it's going to confuse the hell out of you. Do you even have a 21? $21 strong with an area to hold. Line up area on 13. Triggers suggest it will hold. Area on 5-1 for entry. Market flow signal and area. That's pretty much it. But you have to write your own. The 21 says go. I don't have a predetermined set. This is just how my chart reading gets me to this point. Where does the circle line up? Well, the circle lines up right here, right? And now here, I've got the gap theory. And it lines up with support. But guys, everything says down, right? Bad top. Not a termination condition from an area, just a pivot from the middle of nowhere, right? But Thala, look at the strength down coming into the area of support. Are you willing to fight that? I hope not. So rather than arbitrarily jumping in at 90, because look, it drops all the way to 82, probably stopped out of that one. Why not wait for actual confirmation? right? Or if you're not using market flow, why not wait for a close on the correct side of the small trigger saying that that momentum is decreased? This is how plans come to be, guys. You learn to read your charts, you learn to recognize the patterns, and then ultimately you create opportunities for yourself based on the advantages that you see. Smalls above the large are wide, they're angled in the direction of the trend. 81.33 has not broken, but it has the potential to break. In the event of a no divergence, strong trigger pullback, I've got one potential area where that market is likely to continue on a medium probability 50-50 trade. Does that make sense? Do you see how quickly that analysis happens? You'll get to that point. And then, Dave, you're going long on a 50-50. You're trying to take a momentum style long. And that's all it is. That is a momentum style trade. Odds favorable momentum. Everything says up. Dave lets it exceed and just pop right back to that area of support. Momentum in, momentum out. David, beautiful execution there. Not a high probability trend trade, right? David, can I ask you, how long did it take you to get comfortable with this entry? Couple weeks? Recognizing the momentum? And that's super quick profits. That's in at 34 and out at 40. 6 ticks. Today, you were today years old. So typically on a momentum style trade, it's momentum in, momentum out. And you haven't had a loss of momentum yet, right? So you're going through the study. I noticed you were on Sim. What a great place to practice things. What would constitute a loss of momentum? Well, a reversal bar on the wrong side of the triggers, probably a loss of momentum. See how the bars are outside of the small triggers and they're working their way back in, getting to the other side? Well, that's a loss of momentum. But if you take this one, you make those quick profits, you manage it assertively, if you end up getting out of that trade, well, don't you still have a potential entry? So everything is patterns, guys. I can't stress that enough. You have to see something and practice it and understand the rules to get you in until it's easy. And that takes a little while. The more you post in class, the quicker you're going to get there. Hit your profit target and get out. I love it. No reason to hope, right? Get in, get out, make your money, wait for the next trade. Everybody wants to hit a home run, guys. 4 singles is a home run. Why hold for a $400 trade when I can hit a $100 trade 4 times with the highest advantage? The whole goal of day trading is to make money. It's not for your friends to look at you and go, oh my gosh, you sure did hold that one a long time. I don't know, Thala. I don't know. Currencies, yes. You could build a dollar chart. You could build a Canadian chart. You could build a yen chart. You can trade MET MBT futures, which is the Bitcoin futures. Those are traded on the CME exchange. Thank you, John. CEO lurking in the distance. Guys, learn your rules. Practice them. Simulate every day. Use that monopoly money. Practice the right trades. Simplify. Keep it basic. Start with 1, build to 2, build to 3 if that's what you need. But after class before the next day, do market replay. Go fix your mistakes. Take the trades you skip the trades you shouldn't have taken. Manage more effectively. Market replay is a great place to work on management strategies. Take pictures of everything that you do. Bring them to class the next day. Totally cool. And repeat this process every day until you're sure you have the correct trades. Not until you're sure that you can make money. Because if you're always taking the correct trades, guys, you should be winning more than you're losing, which means that you should be making money. If you're taking the correct trades and not making money, well, then you need to work on your management. Once you guarantee yourself you can win, then go to live money. And then, guys, the flip side of that, it's not like the old days where you had to go in with 10 grand of your money and hope that you're as good a trader as you thought you were. Now you can use these prop firms like Apex. Give them a small monthly fee. They'll let you control $50,000, $100,000, $1 million. Practice your trading plan on the prop firm. And you can trade your money later, right? But why not trade other people's money? So straight from the education page, guys, there's a link that'll take you over to the Apex site if you're curious about it. And there's an automatic discount for Nexgen users. But right now, they're doing 80% off, which is pretty cool. Dave B. Oh, you took advantage of it. Everything says up. So you just made money all the way up. Beautiful, Dave B. Great read. I think you and an awful lot of people took those trades. Who is this? Thala? Given that this is touching a fib level, the market might likely turn around. If this fib level would have not been there, we could have possibly traded it down with the rules. The rules I had, mentioned a few minutes ago. Is my understanding correct? Wanting to go short right here? Let's see. You know the easiest way? And I don't know why you guys play this game. If the fib level wasn't there. Well, if I had odds favorable momentum, I guess it's just an if-then game, right? Let's take a look. Am I coming from a good top or bottom? I'm actually not. These little purple one-to-ones may create a bounce, but they're not those Fibonacci's. Dave, a great job today. Thanks for being here. Dave B., I think they were great. I think that everything that you looked at, everything that you saw was valid. And this is the one that might have stopped you out because that was your entry and it just pushes lower. And then there's your second trade here. If you're going to take it where the trigger lines roll. Does that make sense, Dave? This one gets stopped out. Small triggers roll, everything says up. That's your continuation style to take advantage of everything that's happening on the 13-2. No rule 3 met? Nope. It was. Oh, yeah, your synthetics are gone. So, yeah, you're just hoping at that point. I'm trying to line up where everything is. 1, 2, 3, 4. Termination conditions, termination conditions, termination conditions, termination conditions. Clear path, money. Clear path, money. So, yeah, terminations on both, really. Does that make sense, Dave? Termination condition here. Termination condition here. You don't have the clear path till this one. And that's your trade. Right at the mid-band. You're a tick outside. You're a tick outside. This is one of those ideas, Dave, where you say everything on God's green earth says up, but my mid-band is one tick outside. So rule 3 is not met. And if you choose not to take it, totally cool. Does that make sense? And this is the biggest thing, is you can't have seller's remorse. If you're so exact on your rule that this has to be inside and a tick outside is too much, that's totally cool. I'll gauge. If it's a 50-50, I won't mess with it. If it's wide open spaces, I'm usually pretty good with a tick or two. But that's just experience, right? With odds favorable and absolutely nothing in the way, I'm cool with that tick or two. All right, back to you, Thala. So let's just do this. Did you have odds favorable? Yes. If the fib wasn't there, would it be no termination conditions? Yes. You're not coming from a termination condition, so momentum style is off the table. Thala, do you have an area inside of favorable large triggers? Nope. So, are the rules met? Nope. You can still take the trade though, right? But you have to take it knowing that you broke your rules. Guys, there's only two things that I wouldn't. There's only two things that should get you where you want to be. Rules met, rules not met. Anything else, you're just trading, what if? What if a magical trade fairy had you win the trade? I don't know. Rules met, rules not met. And that's the easiest way to do it. So if you're not sure, if you had a trade, go back and look at your picture. Were the rules met? It's really that simple. Because if you're not sure, then you're asking if your opinion was correct. 50-50, pull back to support, out at the first trouble spot, chumming the waters right at support, not willing to give it back. Gary, beautiful trade. Does that make sense, Thala? For termination rule on the 5-1, 3 divergence in a H and S. Rain, help me with the H and S. Head and shoulders. Okay, let's go to the rules. And this is a great question. Thala, I agree that everybody should be proficient at the simple trades. And then the time that you spend studying the simple trades, you start recognizing patterns for more advanced. But if the simple trade, guys, let me ask you again. If a simple trade wins 70 to 80% of the time, do you need more trades? Or do you just need more contracts on those great trades? Joel, take care. All right, so Rain, I love this question. So let's do this. 3 divergences in the same price range is a term. Are you comfortable with that one? Just three in the same price range. It's a termination condition. 3 divergences with weak triggers is a stronger term in same location. Here you go, Racha. And everything's in the user guide, straight from the education page. You're welcome. And then finally, Rain, 3 divergences with higher pivot or lower pivot. And that's that head and shoulders. And now I know what you mean when you say H and S. That's that head and shoulders that is an even stronger termination. So it's not that one isn't a termination condition. 3 divergences is a good one, and it may reverse the market. 3 divergences with weak trigger, it adds power to it. 3 divergences with that head and shoulders pattern adds more power still. Does that make sense? And I think that's a pretty common question. I like that question. And then Stephen F., if you move a profit target and it closes, will the trailing stop in your ATM strategy work? Stephen, do you have automated trailing stops? Because I've never used those. Man, look at that. I love rules-based trading. So Stephen, let's say that your profit target is here and your stop is here, but you decide to move your profit target to here. I don't use them, and I'm not knocking anybody that does. Are you sure about that, Mahir? Thala, take care. Are you sure rule number one's not met? What's rule number one? Haha. Rule number two's not met. So what kind of trade is this one? Mahir, for you it's no trade, right? But as you grow with the software, this is a 50-50 trade. This is a medium probability trade. With all that momentum, the area has the potential to break, which means with these strong triggers and a tiny window of opportunity, you'll probably grow into taking this trade. And Stephen, I don't use them. I don't think I finished a little ADD working here. I like to be in control. I like to be in control of my stops. I like to be in control of my targets. My trailing stop doesn't recognize if the conditions have changed, but you will. Mahir, this is your next trade as you grow with the software and get a little more comfortable. This is that potential to break with all the momentum. All the momentum, tiny window of opportunity. This is a trade that has to be managed assertively, which means that first profit is either at the area that hasn't broken yet or at that divergence high. And when that first profit is taken, you get to a zero loss level. This will be your trade eventually. Guarantee it, promise. Because that's a beautiful look. But you have to build confidence in those entries. You have to build confidence in those conditions. Those rules begin to become second nature. You don't see the red line on your chart? Well, then you had a clear path and there's zero excuse. This one? Those are synthetic. Those are taken over from a different time frame. Does it change anything though? From the top of the triggers to the bottom of the triggers? Ready? Squeeze it. There's my only area of support. There was one spot this market was likely to continue from, right? But now we have a couple divergences on a 50-50 trade. Now I have small triggers inside of the large. Do you see how your 5-1 is telling you that we're losing the potential for this area to break? Two losses of momentum. Anything can happen triggers. All I'm doing is I'm reading in the moment. Guys, if you didn't take the best entry, you're playing with fire a little bit on this one. Does that make sense to everybody? Guys, for a market that was boring as all get out, I feel like we got some good lessons in today. True story, this is the most difficult kind of market to teach in because it requires an awful lot of patience. And we go back and we start going through those things. If you guys got nothing out of it today, other than this, gap theory likes to finish the move. If that's the only thing that you got out of this today, which is cool, guys, go back and see how many times this happens. Open up your 13.2, and how many times does a pivot from nowhere come back to support and finish to the next key area? Because you're going to see it. Pivot from nowhere, makes it to the area. Pivot from beyond, comes back to resistance, makes it back down. Guys, these are patterns that are going to help you as you grow with the software. And yeah, Tony, it's been really slow. 5-1 said don't do it, right? Gosh, be a chart reader, ladies and gentlemen. If you take the time to be a chart reader, you're going to end up an amazing day trader by default. But that's it for me today. I appreciate you guys being here.